My name is Divya Balji, and I'm the team leader for Equities coverage in the Americas for Bloomberg News. Thank you for joining us at Bloomberg's Canadian Fixed Income Virtual Briefing Series. Our topic for this panel discussion is the green case for Canada and the globe. I am excited and honored to be the moderator with our distinguished panelists today. Let me start by introducing them. We have Halina van den Hagen, treasurer at Manulife, Elizabeth Wallace, Senior Manager for Funding and Foreign Exchange of Ontario Financing Authority's Capital Markets Division, and we have Heather Taylor, Chief Financial Officer and Treasurer for the City of Toronto. Welcome, ladies. Good to have you with us. So let's get right into the topic. There's no question about it. ESG investing has become an extremely hot topic over the years. Climate change, social injustices, and corporate governance issues are all on the forefront for investors these days who want to put their money to work, but also make sure they're investing responsibly. So my first question is, what are the current trends that you're seeing right now when it comes to ESG investing or green investing? Halina, do you want to kick off the conversation?
Absolutely. Pleasure to connect with everyone virtually. There are actually several interesting trends in the ESG investing space worth commenting on, and I would like to briefly cover 5 of them. First, throughout 2020, the growth momentum in the ESG market has continued, as highlighted by the year-to-date 2020 issuance of US dollar 463 billion versus the full year 2019 of 274 billion. Second, although green bonds continue to represent the majority of the volume, the proliferation and growth of both social and sustainable bonds are helping to drive the ESG market with new structures focused on health and social aspects such as social housing or education motivated by COVID-19. So again, stat pertinent here, in 2019, social and sustainable bonds accounted for 19% of all ESG bonds issued. And now in 2020, year to date, they accounted for 47% of the issuance. Third, there has been an ongoing standardization in the market, with the International Capital Market Association assuming administrative duties and guidance for the governance of the green bond principles, social bond principles, and sustainability bond guidelines, each of which having become the leading framework globally for issuance of these bonds. Fourth, more investors and globally are taking ESG considerations into account via, for example, evaluating ESG scores and risks as part of their regular investment process. And also there is an increasing investor demand coming from a growing pool of investors with specific green and thematic mandates. Result, the pricing of green and sustainable bonds is perceived as increasingly aggressive relative to the issuer's regular established curves. And the fifth, maybe the most interesting trend, is the emergence of sustainability-linked bonds that are the new frontier, whereby issuers identify key performance indicators, and if they fail to meet these goals, for example, a reduction in greenhouse emission or investments in renewable energy, then the coupons on these bonds would increase. So unlike traditional green bonds that would link the issuance proceeds to the financing of specific assets, the sustainability-linked bonds aim at reinforcing or even changing certain behavior. And since I am treasurer of Manulife and always like to remind that Manulife was the first global life insurance company to issue a green bond back in 2017, I am also happy to see several new entrants among our peers. into the ESG market, including in 2020 Munich Re and other global insurers in Europe, as well as Prudential and MetLife in the United States.
Thanks, Halina. Now that you mentioned green bonds, Elizabeth, is this something you could speak to from a provincial perspective? I think it was last week, maybe, that we saw the province raise about 1.5 billion through its largest ever sale of green bonds. Is that a fresh sign that ESG debt is gaining traction in Canada?
As you noted, Divya, last week Ontario issued its largest ever green bond. Ontario's total issuance of bonds as part of its green bond program now stands at 6.75 billion across 8 issues since the program's inception in 2014. Over this 6-year period, we have been the largest and most consistent issuer of green bonds in the Canadian market. Much has changed over that time, and we see the market continuing to evolve. The first trend I was going to speak to is the same thing occurred to Halina, obviously, is the growth in the social and sustainable bond sectors and more recently COVID-specific bonds. Although Ontario funds projects which have both environmental and social benefits, for example, hospitals, the province is focused on green bonds. We continue to monitor developments related to sustainable bonds and may consider issuing those in the future. But from an issuer perspective, one of the challenges with these bonds has to do with having the right impact reporting statistics to provide to investors. While Ontario has yet to issue a green bond outside of the Canadian dollar market, we have seen the development which has taken place in Europe and which I think we can agree is the center of innovation for ESG type products. Anything that's happening in Europe seems to be quickly incorporated on a more global basis. A few years ago, the trend was to begin referencing how various green bond funded projects aligned with the 17 United Nations Sustainable Development Goals, or UN SDGs. Now that that has been incorporated into most ESG related programs, the next evolution appears to be the EU taxonomy for sustainable activities. So we are monitoring the adoption of the EU taxonomy and its influence with respect to standardizing the ESG market. Another trend seems to be the amalgamation of the various entities that provide ESG-related ratings. After years of seeing a growing number of entities offering these services, we are now starting to see some consolidation in this area, which may lead to more of a standardized approach. This will hopefully be supportive of the market. Both of these trends reflect the ongoing interest in standardizing the green bond market as it matures and integrating best practices into its foundation. One last trend I'll speak to is the growing number of investors, or just basically growth. So a growing number of investors interested in ESG-related fixed income products. Our most recent green bond issue attracted 5 new investors. It is heartening that after the number and size of green bond issues Ontario has brought to the market, there continues to be growing investor interest. On the flip side, there is a growing number of issuers interested in the ESG market, including all levels of government, corporations, utilities, and pension funds. Anecdotally, I'd also like to note that major Canadian dealers have all developed a core competency and made significant investments in the ESG market, which is yet another positive trend.
Well, that's good news. Elizabeth had mentioned COVID. Heather, is that something you could talk about? I know that there was, Toronto launched its social bond framework in one of the craziest times, during COVID. Can you tell us a little bit about that?
Yeah, I'm going to step back a little bit and share with you, the City of Toronto's commitment to ESGs. So, as mentioned earlier, the city has participated in issuing green bonds. And when we created our framework, we intentionally created a sustainability framework. So it gave investors some flexibility in their choice as to whether or not they wanted green bonds or whether or not they were interested in social bonds. So we created a social bond framework, and really pleased to share that we were the first Canadian government to do it. And we issued our social bond framework in May. And to your point, in the midst of a global pandemic. But really, I think we're trying to find some silver lining in COVID. And the silver lining for us is that COVID has been a catalyst to identifying the social needs. And right here, on Canadian territory, the fact is that when we looked at the programs that the city has to offer and where we're making significant investments, it aligned perfectly with a social bond framework. So really pleased to think that not only are we offering an instrument that is of interest to the market, but it actually aligns perfectly with the city's vision, the city's priorities, and the global pandemic was the perfect time to go into the market because COVID has been a catalyst to making sure that there was acknowledgement that the need is here, the need is now, and Toronto is, to me, the perfect place to launch it. So really proud of the fact that we were the first government to do a social bond framework.
I do want to jump into the fiduciary duty side of this. Firms do have a fiduciary duty to optimize returns. Is there or should there be a trade-off when it comes to ESG investing and returns? Heather, I don't know if you have any thoughts on that, especially with the social bond that you took to the market that did really well.
Yeah, so, as I just mentioned, we issued our framework in May, and we all know the markets were vulnerable. They still continue to be vulnerable. And we were bold. We went out to the market and issued a $100 million bond. And interestingly enough, for us, it was a test. It's our commitment, but we really didn't know how well it would be received given the times that COVID has presented. So we went out with a 100 million instrument, and it was 4 times oversubscribed. And so what that does is, one, it identifies that, Halina mentioned it before, that there's incredible investor demand for these types of bonds. And we were able to attract investors globally as well as domestically. And for us, we were able to test the market. We were able to identify that there was true interest in the City of Toronto's programs, the social programs that the bond was supporting. The fact is, to your point, from a fiduciary perspective, we in actual fact got the lowest interest rate that the city has ever entertained. And so we were lower than the traditional instrument rate. We were 4 times oversubscribed. And so what it tells us is that the investors are looking for their dollars from a return on investment, but truly the shift is happening, that they're interested in the social returns. And so when we look again to what a municipal government is expected to do with regards to its social programs, it aligned again perfectly to what we were trying to accomplish. So we felt that it was a win-win right across the board, and it was the silver lining in the midst of a global pandemic.
Halina, just listening to what Heather was saying, there is interest in social returns. What are you hearing or what are you seeing from your interactions with clients? What do investors think? Is there a conflict with investing in ESG and maximizing returns?
So there is an ongoing conversation around the theme because logically, if we issuers claim the benefits and cheaper cost of issuance, it means from the investor perspective, they are getting, compared to regular bonds, a somewhat lower benefit from the same issue. So there is clearly a debate going on. Based on various research, in general, the conclusion would be that companies with higher ESG scores tend to exhibit a valuation premium and a stronger performance. However, it's not feasible to attribute the causation, as it also might be that strong companies tend to attend to the ESG agenda more proactively. Similarly, from the fixed income perspective, there is various research that indicates that issuing an ESG bond, as Heather mentioned, from her experience, is deemed to command lower cost for the issuer. But I always hasten to say that the calculation of the so-called greenium requires considerable judgment. And I did see in commercial issuances a claim of benefits of 5 to 10 beeps or even higher. But again, the exact attribution of pricing to the ESG component is always debatable. So from my perspective, while I believe that with the growth of investor demand and the growth of the market, the relative attractiveness of ESG versus a non-ESG bond is bound to result in rising cost advantages. I'm also a bit cautious with respect to the precise quantification of pricing benefits, but always note that I see value in sustainability in its own right, as it represents a set of values which many corporations and the governments seek to uphold, because in the long term, commercial interests and well-being of a society do converge.
Okay. Elizabeth, from a provincial issuer standpoint, what are your thoughts on this?
As with all our bond issuance, we would expect our green bonds to be priced in the context of our benchmark curve and reflect investor demand prior to and at the time of issue. At this time, it would appear that pricing would be at or slightly through our benchmark curve. While Ontario's green bond issues are smaller than our traditional domestic benchmark issues and do not trade as actively, they are liquid, trade regularly, and enjoy good visibility on provincial bond pricing screens. From the province's standpoint, part of our fiduciary responsibility is to provide investors with transparency in our impact reporting. And we've been publishing an impact report since 2015. So I think there's responsibility on both sides. The comment I always run into about returns and, forsaking returns for the for investing in ESG is just, I think maybe our definition of return is too narrow when we look at it with that particular filter. Might be better to define return not just as a financial metric, but also, what did your money actually do? Beyond generate more money, did it improve the world in some way? And if so, how do you calculate that return? Because I think just looking at the sheer mathematical construct, you miss a huge portion of what that money is expected to do.
That's basically the epitome of ESG investing to a certain extent, isn't it? You're investing and you're looking at various ways to put your money into it, but it's hard to quantify that a lot of the time.
Agreed. But I'm not sure that even when people take math on a spreadsheet, that the return they calculate it tells them as much as they think it does.
Right, that's a fair point. I do want to get into Canada as well. We're obviously all sitting in this country. What role does Canada play on the global scale when it comes to ESG investing? Elizabeth, I don't know if you have any thoughts when you're looking at it from a provincial outlook. We are due a fiscal update that will likely focus on a lot of green investments. What are your thoughts when it comes to where Canada stands?
Oh, well, I would say back in 2014, when Ontario launched its green bond program, the size of the Canadian dollar green bond market was 1.2 billion. Last week, we issued a single green bond that eclipsed that total market size. So we've come a long way since 2014. Ontario itself has been recognized recently with a couple of awards that are I would say, global in nature, one from environmental finance and one from climate bonds initiative. So it would seem that we've got the right idea in terms of how we're approaching the green bond market and the work we're doing. Ontario itself is one of the largest sub-sovereign issuers in the world. And with that comes global name recognition. Our consistent issuance of green bonds in the domestic market and our ability to issue these bonds in benchmark size paves the way for other domestic green bond issuers and invites foreign issuers with robust green, social, or sustainable bond programs to issue in the Canadian dollar market. And I would use as examples like World Bank or even European Investment Bank. So similar to other Canadian green bond issuers, Ontario's practice of using widely recognized core indicators for its projects and adopting impact reporting recommendations of the green bond principles helps to provide leadership and stability in the Canadian green bond market and provides a consistent Canadian product to investors. So while the ESG bond market in Canada is relatively small compared to those of Europe or the US, its issuers follow the many important protocols in place globally, which puts us on an equal footing, I think, with these other larger markets. So finally, I just talk a little bit about sustainable recovery. We've touched on COVID-19 here, and I think it's recognized as the largest disruptive force in the last century. It really presents an opportunity for leaders everywhere to map out a sustainable plan for economic recovery and that ensures we meet the environmental and societal objectives the global population is demanding. So I think this is probably me winding up before you talk to the other two panelists. So I think it would be really disappointing if we missed this opportunity to do some course correction towards a more sustainable future.
And Heather, when we look at Canada as a whole, we pride ourselves on our social programs like the healthcare system. How does that play into this conversation for Canada on a global scale when it comes to ESG, when it comes to ESG investing?
I'm going to take a different approach on the ESG and what Canada can do from a leadership perspective. And just an example that I'll share that probably many are aware of is, if you remember, in 2014, the Ontario Securities Commission mandated that public companies had to disclose how many women they had on a board. And because of that, if we stop and think about the concept of what gets disclosed, what gets measured, or what gets committed gets measured. And the way I look at it is from a Canadian leadership perspective, from an ESG perspective, what we need to do, and Elizabeth spoke to it earlier on about standardizing the ESG principles and how we, in actual fact, can approach being rated from an ESG perspective. The City of Toronto, in the absence of any guidance, I insisted that we put in our carbon commitments in our financial statements, because again, if it gets put in there, the accountability is there and we will get measured against it. And in actual fact, I got resistance from the auditors saying, well, there's no guidance. And I think it's just a very small example of how I think as Canadian leaders, we have the opportunity of being bold and forcing the issue of coming up with standardized ESG metrics. The City of Toronto is also committed to issuing an ESG report. And again, going back to the premise of what you put out and commit to will get measured, the level of accountability increases. And, I sit in a very unique position because the City of Toronto has money that they go out to investors through the Toronto Investment Board, which I sit on. And we demand from our investment managers ESG principles to be adhered to and the evaluation of ESG metrics. And then in turn, we go out to the market to raise money. And I can't understand why investors wouldn't expect the same that we're expecting of where we put our money. And so I think, again, coming back to what can Canadians do, I think this is the time. Elizabeth just mentioned the course correction that we have a huge opportunity to address. And this is about course correcting. This is about putting out the commitment and the metrics to be held accountable to. And I think as different levels of Canadian government, we have the ability to put the stake in the ground and draw the line in the sand and say, hold us accountable. So I know from the city, I mean, Toronto is a city, but it's the fourth largest government in Canada. We are being bold enough to say, hold us accountable, because we are making this kind of commitment to make sure that the future is something where we continue to thrive.
And this is really the time to be bold, especially when we're dealing with something that no one had expected would happen throughout the world. Toronto is going to be coming out with their first ESG report. When are we expected to see that?
The hope is that you will see it in December. So it is being written as we speak. It is going through the final touches, but again, the content is there, the commitment is there, and we're super excited because we'll be the first government to issue an ESG report.
Are there any hints? Is there anything you can tell us about the report?
Again, it reiterates the city's commitment. And so I go back to the city declared a climate change emergency in late 2019. We've put in our audited financial statements what our carbon commitments are. We've accelerated our net zero carbon commitment to 2040. Our social bond framework gets highlighted. And so this is just an opportunity to actually create the baseline of where we are today, where we need to go. And again, I come back to COVID. COVID has been a catalyst to acknowledge and address the needs, the social inequities in society. And it gives us an opportunity to actually really, to Elizabeth's point before, about creating that path, that roadmap of where we want to go. And that's really what we're trying to do, is we're creating that roadmap. We're talking about homelessness and shelters and healthcare, very much in the ESG world, very much on the E and on the S. And the governance piece is under development, and we don't profess to have it all perfect because it's our very first year, but it's definitely a great start.